Okay, June 10th, 2025. Let's talk about gold and crude. Partly because there is some interesting aspects with the exit part of these trades. Exits are so important. We talk a lot about entering trades. We don't talk a lot about exiting trades. This is a really good one to talk about because of, reading the context can help you optimize your exits as well. When I got up this morning, so I didn't go into replay mode here. I can, but this line right here, this is 7:30. This is when I'm ready to trade. I'm ready to trade anytime after 7:30. And I'm looking for really a move back into some sort of level. So, if we kind of like take a look here, I'm looking for a move somewhere back into a level like this. I like seeing this come down and then some sort of pattern around here of going back up. Now, the first question is, why am I even thinking that I'm going to go back up? Well, that's because of my data. All right, so I've shown this before, but this is my dashboard, 16 years worth of data that gives me what's called RDR model probabilities. This is based on the DR IDR framework. And what I want to know is in the RDR, the regular trading hour session, what model are we likely to have? And you can see we have like a 49% probability. Let me actually select the day. 50% if we actually choose Tuesday. 50% probability that we're going to have what's called a UXP model. A UXP model is really kind of an upward model. And so my expectation is that if we come back through here in this area, right, we're really just kind of setting up for this UXP model, which is exactly what we got. I'm not going to explain what models are. That's, part of, the coaching and the work that I do. But that's kind of what we ended up getting. And so I was expecting a long bias. Now the question is where are we going? I like to use these monthly targets. Up here, I got a big monthly target up here. I like to use these. I was hoping that we'd kind of get all the way up here like this. But the challenge today with this particular trade is that we had something in the way. So let me just bring this up. This is called our weekly. We have a weekly level. Okay, so I've got monthly levels, I have weekly levels, and then I kind of have like daily levels. So in my weekly level, we kind of came up into this weekly box. So right here, we come into the weekly box. What I would have really hoped is that we stop right here. If we'd have done that, then I would have had a lot of confidence that we would move at least up to the edge of this weekly box. When we came down here and outside of the box, now I knew we'd probably come back in and retest and up to here. We could also have just come up to here and then completely failed and gone the other way. So those were the kind of the two scenarios that I was looking at right down here. This is enough space for me to get into a trade, work myself into a trade, because I have enough space where I can move to break even before it gets there. So good enough to take a trade, but risky enough that, hey, I knew this might be kind of a more muted move unless there was a lot of energy coming into the market. And so that's kind of what we got when we kind of like take a look at, the actual, what happened. This is that move down. Okay, so we kind of had this move down, move down, move down. I get this signal right here, but I don't get the little tap back to my level. So I had an order right here waiting for a little tap back. We barely missed that. You can see we barely missed that. Right, let me bring this up really big so you can see it. Barely missed that here as it came down. And so I kind of had to wait for a little bit longer. So I got in a little bit late to this, but there was still plenty of R available. So I got in right here, and then I got in here again. And, that was kind of the move. So now what happens is if we come back here to our kind of our main graph, I just want to zoom in here because this is so interesting. I see this all the time with these levels. This is called to the tick. We even have like a little acronym, TTT, to the tick. Notice how we to the tick reject from this midline. I didn't draw this box after the fact. This is what I had on before I even started my day. It's a weekly level. To the tick. to the tick, we reject right there. When that happened, I was kind of like, yeah, I'm done. Fortunately, I took half off right here. We start to come back down. I got rid of the rest, small profit. But, I at least was able to read well enough this particular exit, which was awesome. So that was the gold trade. I did a great job getting in, did a great job of being patient for the trade, and did a great job of exiting the way I needed to exit to, kind of capitalize on the most. If I'd have taken the whole thing off at that point, and then it turned and went all the way to the top, I probably would have been kicking myself. So I can't kick myself for taking half off and then taking the rest off as it started to turn around and come back down. So that's the gold trade. Now, let's look at the crude oil trade. So a little bit similar because, we didn't have the same pattern, but we did have data that was on our side. You can see here from a data view perspective that, this is the 7:30, time frame. Again, this is my trigger. I can trade, anytime after this if I have a setup. And, what was happening here was I was looking for that UXP model. Let me just show you here, because we got kind of the same thing happening. Let me mark here for Tuesday, 46% probability that we were going to form an upside X plus model, which an upside X plus model just means that we would have a box, this DR IDR box that would be something like this. Okay, so this is the important level right here, but the lower level of this box would be above this one here, right? This lower level would be above that. Okay, and that makes it a UXP model. And so that's what I was expecting from this period, right, all the way to this period right here. Okay, something changed there. And so like what I'm looking for is we come down into this, I'm okay still looking long, but as soon as we did this right here, things changed. My thesis changed. The way that I was looking at how to get in and how to get out might have changed. Okay, so let me just kind of show you what I mean by that, because the data is what guided me to those particular changes. So we're going to bring the data back here and just kind of show you something. One thing I want you to notice is, all right, so when we have this level right here, when this happens, okay, we actually, let me actually kind of zoom in. This might make it much easier to see here. Okay. All right, let me bring my line back here. Okay, so we have this right here. Notice that we have a close below this level right here. And I have data for that. So my data tells me something to do a little bit differently. Okay, that is this filter right here. And so now I change. Notice I change from upside X plus. But as soon as that happens on Tuesdays, 41% of the time, we're going to get what's called a UX model. It's a little bit of a different pattern for this RDR session. And all that means it's like a UXP, right? That's why it's similar in name, but it means that the lower edge of this line is going to be below this. Okay, so UXP, it would be above. That's a UXP. A UX would be something like this. And so I knew that when we kind of opened the day, we needed to come back into this range and have the low inside of here. And so this was no longer even an option for me to go long, right? I wanted to pause on going long at that point. You could go long, still okay, but for me, I kind of paused. So I wasn't necessarily looking long. I was waiting for this to kind of make this move, come back down, maybe retest. So what do we get? We get exactly that. So we get this move down. We get this nice signal here that I had, which didn't trigger me in. I couldn't get into it anyway. And then we get, this shot and then this shot as two options for being able to get into this particular trade. And then we're kind of up and going. And so the question after, like once you're in this trade, the question is, okay, well, where do I get out? Like, where's the best place for me to get out? Now, if we come back and look at our bigger picture here, our bigger picture is a move that maybe goes from here, because we were kind of looking down here, all the way up to here. I was so hoping that we were going to do that. I was like, that would be totally amazing, totally awesome. And so this is kind of my upper target. This is my nearby target that's kind of probably worth, looking at and taking, or at least taking half and then maybe taking the other half up here. And so that's kind of how I was playing it, was half here and then hopefully maybe quite a bit more right up here. All right. So I did that. So I took half. So I took half right up here at the edge of this monthly. We made this. And as soon as this started happening around 10 o'clock, right, this kind of like beginning of this failure right here, I looked at my data again and I noticed something a little bit different. So if we come back and look, the other thing that my data tells me is it can tell me, like, in this RDR session, we have what's called a confirmation, which is a breaking of the structure. Okay, so the structure is formed in the first hour, and is the structure going to break long, or will the structure break short? Will it break long, or will it break short? Okay, so when I plugged in kind of all this stuff, so we hit a UX model. Okay, I can do that. I can get more records here if I take off the Tuesday. And we had a long box. I'm not going to explain what this is, but I'm just going to explain these are actually, some of the characteristics of the way this day formed. We had a long box. What's important is just 83% of the time, I would actually confirm to the short side. So at this point in time, right, I'm actually thinking we're going to do something like this. We're going down. The data tells me that most of the time, 83% of the time, we do that. And so this was actually, this move right here was actually very unexpected. And I wasn't surprised that we kind of came up and then we actually ended up going down, because the data was telling me that the pull to the south side, to the downside, was so strong. And so I exited again when I was up here somewhere as well, and then was just looking for another possible setup, maybe something else, if we had a chance to go long. I took another long. It ended up at break even, and then we kind of had the crash down. I was already gone by then. But that's my day. That's kind of how I look at my day. I use my data pretty heavily to help me really refine my thesis of directionality and context. And it is my favorite thing to do. It is absolutely awesome.